Welcome to Wall Street Assassins Learning Center. Lesson 1, Vocabulary. In this section of the lesson, we're going to be talking about key terminology and words that we use every day in the stock market. Let's get started. Number 1, bull market. A bull market is a rising market. Anything that has to deal with positivity in the stock market is going to be considered bullish. Even if you have a positive outlook of a stock, say you believe Apple will rise in a day or the next few days or months, they're going to give you the nickname bullish, meaning that you're positive on the stock. Number 2, bear market. A bear market is a falling market. Basically, anything that has to deal with negativity in the stock market is going to be considered bearish. Even if you feel like the stock is going to drop, they're going to give you the nickname that you're a bear, meaning that you're negative on the stock. Number 3, blue chip stocks. Blue chip stocks are basically well-established stocks. Example, Apple, Tesla, Facebook. Basically, any stock over $20 is considered a blue chip stock. Number 4, broker. A broker is a person or establishment that allows you to buy and sell a stock in exchange for a fee, such as Robinhood, TD Ameritrade, eSchwab, and there are plenty more. They're basically the middlemen that allow you to buy and sell stocks. Number 5 and 6, bid and ask. So bid is the amount of money a buyer is willing to pay for a share of stock, and ask is the amount of money a seller is willing to pay for a share of stock. Every time you purchase a stock, there is a tug of war happening behind the scenes between buyers and sellers, creating the price to go up if there's more buyers, or making the price go down if there's more sellers. Number 7, day trader. A day trader is a person who buys and sells a stock within the same day. Number 8 and 9, high of day, the highest price the stock has reached for the day. Number 9, low of day, the lowest price the stock has reached for the day. These two numbers can be used as reference points to understand the peaks and the lows of a stock. Number 10, shorting. A lot of people don't know that you could be in favor for the stock to go down, meaning you're profiting as the market goes down or the stock goes down. So that is called shorting. Number 11, going long. That means you're in favor or making money as the stock is going up. Number 12, portfolio. So portfolio is a collection of stocks or investments owned by an investor. Everybody watches different stocks for different reasons. Some stocks move fast, some stocks move slow. So depending on your liking, you're going to gravitate towards different stocks. And everybody has different portfolios and different stocks they watch. Number 13, supernova. A supernova is a stock that is breaking all resistance going up, meaning the stock is going from a low number to a high number within a short period of time. Example, GameStop. Number 14, support. Support is an area or price where the stock is having an issue going down. Number 15. 15 is resistance, an area or price where the stock is having an issue going upward. Support and resistance are two lines in which I will teach you how to create them to identify the high points and the low points of a stock. Perfect buying areas. Number 16, ticker. A ticker is a combination of letters chosen by a company to represent them in the stock market, like an abbreviation. Example, Amazon, AMZN. Number 17, volatility. Volatility is basically how fast the stock moves. Volatility goes hand in hand with number 18, volume, the number of shares traded between a certain period of time. When you're trading, it is highly favorable to like to trade stocks with high volume, especially as a day trader, gives you the opportunity to get in and out of a stock very swiftly. So think of volume as the amount of people inside of that stock. Number 19, VWAP indicator. So number 19 through 21 has indicator at the end of it. An indicator is basically an application you can add to your stock chart to help you understand the direction or what's going on with the stock you're looking at. There are many indicators out there. These are just the top few I look at. Number 19 is VWAP indicator, which is volume weighted average price, which simply helps me predict upward or downward movements within the stock. Number 20, MACD indicator, moving average convergence divergence, which basically lets me understand if I want to enter for a long position or a short position. Number 21, RSI indicator, the relative strength index, which basically helps me know if the stock is oversold or overbought. Oversold means I'm getting the stock for a good deal. Overbought means I'm getting the stock for a bad deal. When you're purchasing a stock, you have different choices you could make. As in 22, limit buy, where you could buy the stock at a set desired price. Example, if I'm looking at Apple and I only want to enter Apple at its current price, example being $100, I could do a limit buy for $100 and my broker will only purchase it at $100. As opposed to 23, a market buy, which is basically a rapid entry into the stock. So market buy is like a quick buy where you could look at it, it could be $100, but by the time you enter it, even if the stock has moved up $1, it will purchase it at that price. Number 24, limit sell. Limit sell is basically you entered at a certain price and now you get to basically sell at a certain price that you want. You entered at 10, you see the stock about to hit 15, you could limit sell at 15 and it will sell it exactly at $15 for you. Number 25, stop loss, which is an automatic sell at your desired price. Somewhat like a safety net. If you get in at $10 and the stock basically starts to pull back or have a drop, you could basically set a stop loss to protect you from any unforeseen actions inside the stock. Number 26, swing trade. Swing trade is holding a stock for more than one day. You could buy it today, sell it tomorrow, next week, next year, all considered a swing trade. Number 27, penny stock. A penny stock is any stock less than $5. Number 28, pullback, which is a moderate pause or a drop within the stock. Basically, the stock taking a breather. Just like if you used to go out for a run, you would get tired, drink some water. Same thing the stock is doing. It's taking a break before it has another big move. And number 29, a halt, a temporary pause in the stock due to high volatility. These halts typically happen with momentum stocks, such as like penny stocks or supernova stocks. When the halt happens, you cannot get in or out of a stock at that period of time.